All right, so last Friday we started the hypothetical $100,000 portfolio. We put $5,000 into Powell Industries and $1,000 into Hyliion. That left us with $94,000 in cash. So 1 week later, how are we doing? Well, both stocks are down, but our portfolio is holding up much better than you might think. One important note before we get into the numbers, I'm recording this on Wednesday morning of August 26th of 2026, and this video is going to come out in 2 days on Friday. So prices may have changed by the time that you're watching. All stock prices and portfolio values in today's fund hunt are based on our Wednesday morning snapshot. And with that out of the way, let's rip the Band-Aid off. Powell Industries was our larger investment. We bought 25.25 shares at $198, giving us a $5,000 position. And as of Wednesday morning, Powell is trading at $192.31. And our position is worth $5,856. We're down $144 or 2.9%. Not exactly the start I was hoping for, but Powell isn't the one that hurts. That would be Hyliion. We put $1,000 into Hyliion at $3.75, and that gave us 266.7 shares. And as of Wednesday morning, Hyliion is trading at $3.17. Our $1,000 investment is now worth $845. We're down $155. That's approximately 15.5% in 1 week, and that's rough. But here's what's interesting. Our two investments have lost almost $300, yet the entire $100,000 fund is down only about 0.30%. And that is exactly why we created position sizing rules before buying anything. Powell was in the growth position, so we allowed ourselves to put 5% of the fund into it. Hyliion was much more speculative. So even though I like the potential of the Carno generator, we also risk 1% of the portfolio. Imagine if we put $10,000 into Hyliion or $20,000. Instead, the damage to the overall portfolio is relatively small. Not because we predicted the decline, we did not. It's because we acknowledged beforehand that we could be wrong. And that's going to be one of the most important rules of the experiment. The higher the risk, the smaller the position. And because we were patient last week, we still have $94,000 in cash. But before we start spending any of it, there's something new we need to discuss about Hyliion. Whenever a stock you own drops 15%, there's an instinct that's incredibly difficult to ignore, to buy more, if you think the thesis is good. If we liked Hyliion at $3.75, shouldn't we love it at $3.17? Well, not necessarily, because on August 25th, shareholder rights law firm Robbins LLP announced that it was investigating whether certain Hyliion officers and directors may have violated security laws or breached fiduciary duties. And I want to be very clear. An investigation by a shareholder rights law firm is not a finding that Hyliion did anything wrong, but the underlying issue deserves our attention. And the investigation follows allegations from a short seller report concerning one of Hyliion's largest potential customers. Hyliion previously announced a non-binding letter of intent with VFG Holdings for up to 250 Carno cores. Potential revenue, approximately $133 million. That's significant because this one potential customer could represent roughly a third of Hyliion's reported $400 million plus pipeline, as you see here. The short seller questioned whether VFG has the financial capacity to execute an order of that magnitude. And again, these are allegations, but the agreement is a non-binding LOI, not $133 million of guaranteed revenue. And at the same time, Hyliion secured a $41.7 million Navy award, U.S. Navy award, connected to scaling Carno pod power modules into multi-megawatt systems. And that's a very different type of validation. So I'm not saying Hyliion thesis is dead. I'm saying the uncertainty increased. And that gives us another fund hunt rule. We do not average down simply because the stock went down. The price needs to become more attractive, and the thesis needs to remain intact. So our decisions are simple. Powell still remains around $192. The thesis remains intact, and we're already holding a $5,000 position. Powell is a hold. If it eventually approaches a stronger buy zone around $175 without a deterioration in the business, we'll consider adding. Hyliion is different. At $3.17, the stock is cheaper, but the uncertainty has increased, and I want more commercial proof before committing additional money. So Hyliion is a hold and a no add. That leaves us with $94,000 in hypothetical cash. And now let's see whether any of this week's three challengers deserve to get bought by the portfolio. So you got three companies, three completely different opportunities. First, we have MYR Group, MYRG, Wednesday's AI Factory champion in our potential growth position. Second is X Energy, XE, Monday's potential 10x stock and our speculative candidate. And third, we got Broadcom, AVGO, the season one AI Factory champion and potential core position. The Friday Fun Hunt has a different job from Monday and Wednesday. We're not asking which company has the most exciting story. We're asking which stock deserves our money at today's prices. Each company can receive one of three decisions: a buy, a wait and see, a pass, and there's a fourth possibility, which is cash. And if none of these stocks gives us the risk reward we're looking for, we keep the money. And if we like a company but don't like the price, it goes into our fund hunt watch list. We establish what we're willing to pay and we wait. We're not just looking for great companies. We're looking for great companies at the right prices, which is very important. So let's start with Wednesday's champion. So we already know that we like MYR Group. Wednesday's AI Factory explained that. Today, there's only one question. Do we like it at this price? And at our Wednesday morning snapshot, MYRG is trading around $303.64. Is that a 52-week high? The 52-week high is $503.57, which is a decline of roughly 40%. But a 40% decline doesn't automatically make a stock cheap. The business underneath the price matters. And MYR's latest numbers don't look like a company whose business has collapsed. The second quarter revenue reached approximately $1.08 billion, up more than 20% year over year. Adjusted EPS jumped to $3.17. That's 86% year over year. The backlog reached a record $3.16 billion. And there are, however, two things we need to address before buying. First is the balance sheet. At the end of June, MYR had around $138 million in cash and only about $9 million of funded debt. So the balance sheet is very strong. But immediately after the quarter, MYR completed its acquisition of Valley Holdings for approximately $328 million. MYR used roughly $93 million of cash and drew approximately $235 million from its revolving credit facility. We shouldn't simply call MYR virtually debt-free anymore. The balance sheet is still manageable, but it has changed. Second is free cash flow. MYR produced roughly a negative $26 million of free cash flow in quarter two. That initially caught my attention, but operating cash flow is affected by the timing of tax payments and project billings. And while the company also spent nearly $29 million in capital expenditures over the trailing 12 months. MYR generated roughly $193 million of free cash flow, up substantially from the comparable previous period. So one negative quarter isn't enough for me to say the cash flow thesis has deteriorated. It's something to monitor. Now we get to the number that matters most Fridays, and that is the valuation. And at $303.64, MYRG's trailing PE ratio is around 29. But current estimates put 2026 earnings around $12 to $12.50 per share, $12 to $12 per share, and 2027 around 14 to 14.50 per share. That gives us approximately 24 to 25 times expected 2026 earnings and 21 to 22 times 2027 earnings. And now we're getting interesting. We're looking at roughly $4.7 billion company participating directly in a massive U.S. grid modernization cycle with a record backlog, strong earnings growth, and a stock roughly 40% below its highs. So now here's my MYRG buy zone. Below $275 is a strong buy. From $275 to $325, it's a buy. From $325 to $375, be more selective. And anything above $375 is going to be a wait and see approach. At approximately $304, MYR Group is inside our buy zone. And because this would be a growth position, we're willing to allocate between 3 and 5% of the portfolio. We don't have to max that out immediately. We can start smaller and leave ourselves room to add if MYRG becomes even more attractive. So MYR Group has put itself in a very strong position to earn some of our $94,000 of the portfolio. But next comes the most difficult stock today to value, because X Energy isn't being valued on what it earns now. It's being valued on what investors believe that it could become years from now. X Energy might have the biggest upside of anything we're covering, but Friday isn't about whether XE could become ginormous. It's about whether I wanted to buy it at $18.89. At that Wednesday price, X Energy carries a market capitalization of approximately $7.7 billion. Meanwhile, current 2026 revenue and grant income expectations are around $220 million. The market already knows Amazon has invested. It knows Dow Chemical has invested. It knows advanced nuclear could eventually become a major source of power for data centers and industrial customers. And investors are already assigning the company a multi-billion-dollar valuation. X Energy can grow enormously from here, but it has to, because initial commercial reactor deliveries are not expected until the 2030s. Between now and then, X Energy needs to navigate regulatory approvals, construction, fuel supply, financing, and execution. But there is a major positive, which is liquidity. Following its IPO, X Energy has approximately $1.9 billion in liquidity in cash and investments, and essentially zero debt. In quarter two, operating cash usage was roughly $97 million, with roughly $63 million of capital expenditures, and that is substantial. But nearly $1.9 billion of liquidity gives the company time. So this isn't a question of whether X Energy has an exciting opportunity. It does. It's a question of whether we're being compensated enough for the execution risk. So at $15 a share, X Energy would be worth $6.1 billion. At 20, about $8.2 billion. At 30, $12 billion. And at 40, it's going to be worth about $16.3 billion. Could X Energy eventually become a 20 billion, 40 billion, or even larger company than that? Absolutely. That's why it made Monday's 10X stock hunt. But what if regulatory approvals take longer? And what if major projects slip? What if investors stop paying a huge premium for revenue that's still years away? That's why I don't want to chase X Energy. And importantly, wait and see doesn't necessarily mean waiting only for a lower price. We can also wait for more proof, a major regulatory milestone, a project moving forward, another customer commitment, a meaningful reduction in execution risk. So my current zones are below $14. It's going to be a strong speculative buy. From $14 to $16, it's going to be a buy. From $16 to $18, it's going to be selective. And above $18, it's going to be wait for price or proof. And at $18.89, my decision is going to be a wait and see, not a pass. XE goes on to the watch list. And now we get to almost the exact opposite kind of company, which is Broadcom. And it's It's not promising us cash flow years from now. It's producing enormous amounts of it today. So Broadcom was our season 1 AI factory champion. And I'm bringing it back because the portfolio still doesn't have a true core position. And Broadcom could fill that role. And as of Wednesday snapshot, AVGO is around $351.67. Its 52-week high is approximately $495. So the stock is roughly 29% below its highs. Meanwhile, the business is still growing at an extraordinary rate. Last quarterly revenue, approximately $22.2 billion, up roughly 48% year over year. AI semiconductor revenue was approximately $10.8 billion, as you see here, up roughly 143%. And management expected AI semiconductor revenue to reach approximately $16 billion in the following quarter. And then there's free cash flow. Broadcom generated approximately $10.3 billion in free cash flow. Broadcom generated that in one quarter. And that makes Broadcom so different from, that's what makes Broadcom very different from XE. The business model doesn't need to be proven. It's working right now. And management has discussed the possibility of AI semiconductor revenue exceeding $100 billion in fiscal 2027. But Broadcom is not cheap. And at our Wednesday price, the trailing GAAP price per earnings ratio is around 50. However, current adjusted earnings estimates put fiscal 2026 EPS at around $10 per share, depending on the estimate set. That puts the forward adjusted multiple closer to the mid 30s. It's still expensive, but it's very different from looking only at trailing 58 times the multiple. So Broadcom carries meaningful debt. There's customer concentration risk, and AI expectations are enormous. But if I were simply choosing the best business of today's three, then Broadcom probably wins. That's not our question. We're choosing the best stock at the price available to us. And there's only one more problem. Broadcom is about to report earnings. So Broadcom is scheduled to report earnings on September 2nd, which is only a few days away. So why buy immediately before we get fresh information? And of course, there's a risk to waiting. Broadcom could report another monster quarter, and AI revenue could beat expectations. Guidance could move higher, and the stock could jump before we establish a position. But there's also the opposite possibility that earnings disappoint, or expectations simply prove too high and the stock falls into a much more attractive range. We do not know, and we don't need to guess. We have 94 grand in hypothetical cash, and we're building a portfolio, and we're not trading around one earnings report. So I'd rather risk missing the first few percent of a move than buy simply because I'm afraid the stock might run without us. FOMO is not a reason to invest. So here's my AVGO zones. So below 310 is a strong buy. From $310 to $375, it's going to be selective. From $310 to $340 is a buy. And then from $340 to $375, it's going to be selective. And above $375 is going to be a wait. So at $351.67, Broadcom is technically in the selective stage. If earnings weren't days away, I could make the case for a starter position. But given the timing, so you see the numbers here. 310, anything below $310 is a strong buy. From 310 to 340, it's going to be a buy. From 340 to $375 is going to be selective. And then anything over $375, it's going to be a wait. So AVGO is a wait and see. And this is different from XE. With X Energy, we're waiting for a better valuation or more proof. But with Broadcom, we're waiting for earnings and a better price. Broadcom goes onto the watch list. And if earnings come out and stock falls into our buy zone, while the thesis remains intact, we're going to come back. And if the stock jumps, we don't chase. We wait for the next opportunity. And now it's time to put all three companies through the same test. So now it's time to put all three companies through the same test. And Friday's scoring system is intentionally different from Monday and Wednesday. Monday's 10x stock hunt is looking for asymmetric upside. Wednesday's AI Factory is trying to identify the company best positioned to benefit from a specific AI infrastructure bottleneck. Friday's about one thing. Would I actually put our money into the stock at today's prices? So, business and thesis quality gets 20%. Growth opportunity is going to be 20%. Risk versus reward is 15%. And the single biggest category at 25% is valuation and entry price. Because a great company can still be a bad investment. And at the wrong price, that's exactly what changes today's results. All right, so this is the Friday Fun Hunt scoreboard. And first, we're going to start with X Energy. X Energy gets our highest growth opportunity, as you see here, growth, and it's at 9.8. The potential advanced nuclear opportunity is enormous, but its valuation and entry price is only at 6.2, as you see here. We're already paying roughly $7.7 billion for a company whose commercial reactor story may take years to fully develop. That pulls X Energy's overall Fun Hunt score down to a 7.76 out of 10. Next, you got Broadcom, AVGO. AVGO dominates business and thesis quality with a 9.7. Growth also gets a 9.7. And financial strength comes in at a 9.2. Of today's three companies, Broadcom is probably the strongest business, but its valuation and entry price score is only at 7.8, as you see here. And with earnings just days away, I'm not willing to force the entry. Broadcom finishes with an 8.59 out of 10, which is an excellent score. But there's one company that beats it, and that's going to be MYRG. It doesn't have Broadcom scale. It doesn't have X Energy's theoretical upside. What it does have is something Friday Fun Hunt cares more about, and that is a better entry price. Business and thesis quality comes in at an 8.8. Growth opportunity is also an 8.8. The financial strength of the company is an 8.7. Risk versus reward is an 8.7. And valuation and entry price is an 8.8. Put it all together, MYR Group finishes with an 8.76 out of 10. So our final ranking is number 3 is X Energy, 7.76, which is a wait and see. Number 2 is Broadcom, 8.59. It's also a wait and see. And today's Friday's Fun Hunt winner is MYRG at 8.76, which is going to be a buy. And here's what I find most interesting. Broadcom actually beats MYR Group in several categories. It's arguably the better business. X Energy has the greatest theoretical upside, but neither one wins today. Price changes the winner. MYR Group gives us the combination of company, growth, risk, and entry price right now. And that's the entire purpose of Friday Fun Hunt. We're not trying to crown the greatest company in the world. We're trying to decide where should our money go today. And based on our Wednesday, August 26th snapshot, MYR Group has earned the right to move to the final round. And now we need to decide exactly how much we're willing to pay and what happens to the two stocks that we're not buying. So MYR Group wins today, but Broadcom and X Energy are not disappointing. They're going into the Fun Hunt watch list. And I think this could become one of the most important parts of the entire $100,000 experiment. Because every Friday, before we start looking at the week's new stocks, we're going to have another question to answer. Did anything on our watch list finally hit our price? And that's how I want this fund to operate. We're not going to discover a company on Fridays, decide it's slightly too expensive, and then completely forget about it. We're going to record what we're willing to pay and what we're waiting for. And then we're going to let the market come to us. Our current watch list board gives us these ranges. For MYR Group, today, roughly 304 price is already inside our buy zone. At X Energy, we're waiting for either a better valuation and ideally below $16 or a major milestone that reduces the execution risk. And Broadcom is different. At approximately $352, it's technically inside our selective range. But earnings is September 2nd, so we're going to wait for fresh information. And that's an important distinction. Sometimes price changes the decision, and sometimes the thesis changes the decision. Sometimes new information changes the decision. Imagine XE falls to $15 3 weeks from now. And if the thesis hasn't changed, it comes back into Friday Fun Hunt. Imagine Broadcom reports earnings and falls to $320 while AI growth remains intact. It comes back, and the same rule will eventually apply to every company that we evaluate. And that's why the watch list matters. 6 weeks from now, a stock we rejected today could become the best opportunity in the entire fund. We don't have to chase it. We don't have to predict exactly when it bottoms. We just need to know what we're willing to pay and whether the reason we like the company still exists. So here's another rule for the fund. Price plus thesis. A lower price alone is not enough, and a great thesis at any price isn't enough. We want both, and that's how a wait and see stock eventually becomes a buy. And after everything we've looked at today, only one of 3 challengers crossed that line, and that was MYR Group. So now there's only one question left. How much are we actually buying? All right, it's decision time. We started today's episode with 94,000 in hypothetical cash. And here's where everything stands. Powell Industries is a hold. We're not adding today. Hyliion is a hold, and with the increased uncertainty surrounding one of its major LOIs, it's definitely not an add. Our potential 10x stock X energy is a wait and see. I still love the long-term potential, but at our Wednesday price at $18.89 and a roughly $7.7 billion valuation, I want a better price or more proof before risking fund money. And then Broadcom, AVGO, is also a wait and see. This is absolutely a company I could see becoming a major core position, but earnings are September 2nd, and we're going to wait for the new information rather than just a guess. Which leads us to today's winner, which is MYRG, MYR Group. And at our Wednesday snapshot, approximately $303, MYRG is sitting inside our buy zone. And we're putting money to work, but we're not going to max out the position. Our growth rules allow us to put between 3 to 5% of the portfolio into MYR Group. I'm starting at the bottom of that range. We're going to buy $3,000 of MYR Group at approximately 303.64 US dollars per share. And that gives us hypothetical fund roughly 9.88 shares of MYRG. And why only 3,000? Because I don't need to perfectly call the bottom. If MYRG goes higher, great, we've invested. But if it falls towards our strong buy range around $275 while the business continues performing, we still have room to add. And that's how I want to build these positions. Start when the risk reward becomes attractive, and then let volatility potentially give us a better opportunity later. And with that purchase, here is our updated fund. Our original $5,000 purchase with POWL position remains. Our original $1,000 Hyliion position remains. And we add a new $3,000 position with MYR Group, and we still have approximately $91,000 in cash. Yes, we're still roughly 91% cash, and that's intentional. There's no price for spending the $100,000 quickly. If it takes us months to build this portfolio, then that's okay. I'd rather have $91,000 available when the market gives us a great opportunity than spend it today simply because we're sitting there. And now we have something else that we need that we did not have when this fund started, and that is a watch list. Broadcom is waiting. X Energy is waiting. And as Friday Fun Hunt continues, that list is going to grow. Some weeks we're going to buy a new stock, and some weeks we'll add something we already own. Some weeks an old watch list stock may finally hit our price, and some weeks we might not buy anything because on Friday Fun Hunt, cash can win. So after today's decision, we have POWL's a hold, Hyliion's a hold, MYRG is a buy, AVGO's on the watch list, and XE's on the watch list. And the potential 10x stock, we're not saying no forever. We're saying not at this price and not yet. So next Monday, we'll go hunting for another potential 10x stock. And Wednesday, we'll continue following the next bottleneck inside the AI factory. And next Friday, all those ideas come back here, along with every other stock already sitting in this portfolio on our watch list. Because there's only one question that matters. Does this stock actually deserve our money? Now, if you want to follow this $100,000 portfolio outside of the Friday videos, I'm building out the Friday Fun Hunt portfolio tracker for stock hunt insiders in the AI Factory membership. That's where I'm going to track every position we own, our cost basis, the prices we paid, our buy zones, and the stocks sitting on our watch list waiting for a right entry. You can become a Stock Hunt member on buymeacoffee.com using the link in the description. And if you're not ready to become a member, that's completely fine. Just subscribe to 20-minute Stock Hunt so you don't miss what happens next. Because Monday we're going hunting for another potential 10x stock. And Wednesday we're heading back inside the AI factory to find the next company benefiting from the AI infrastructure build out. And then Friday, everything comes back here, the new stocks, the old stocks, and the watch list. Every dollar inside this $100,000 fund. Because finding a great company is only half the battle. The other half is answering the question we ask every Friday: does this stock actually deserve our money? So we'll see you in the next stock hunt.